All right. Good morning, good evening, ladies and gentlemen. Welcome again to today's webinar hosted by Nanhua Futures and Shanghai International Energy Exchange. My name is Chen, and I'm great honor to make an appearance as well. Since other presenters has already gone through the contract details and the trading level of crude oil option, I would just briefly introduce a current Chinese future market with the big picture of Chinese capital market as an entry point. And from there, I will share with you guys how overseas investors could participate, as well as what kind of services we can provide to our clients. And then we will call the day. Okay. All right. First, I would like to show you some numbers. And China has been putting so much effort opening its capital market to the world since we joined WTO in 2001. Market reforms in China has been taking place for many years as the government looks to internationalize the RMB and open domestic financial market to boost foreign investment. Well, the Chinese government further accelerated the pace of these reforms in 2020 to open up capital markets to foreign investors and, of course, easing market access and expanding investment scope. Although for a world's second largest economy, its opening can only be gradual. But with this accumulation, the opening of China's capital market has actually, undergone a significant change. If you look at chart on the screen, you will realize that these measures are taking place and aim the inclusion of China's equity and bonds and into major global indices, creating a structural shift that may promote global investors to think more strategically about their exposure to China. Well, figures on capital flows suggested that global investors are very supportive of these reforms, with about 65 billion US dollars inflows in the first half of 2020 versus about 62 billion US dollars during the same period last year. And about 3/4 of the inflows in that period were into bonds, with a very strong focus on Chinese government bonds, of course, while the remaining quarter went into equities. And as an essential part of capital market, commodities always draw great attention by investors, institutions, and industrial clients. Here is just a chart illustrate that well, China has become the largest producer and largest consumer of iron ore and the largest consumer of many other commodities. In order to promote the development of the real economy and China's participation in the global distribution of resources and wealth, China's futures market has opened up, non-international future contracts to foreign investors in the past 3 years. From the listing of crude oil futures on INE in 2018 to the listing of crude oil options, which what we're going to talk about today on INE in June this year. Well, this progress of the opening of international future varieties is very orderly and stable. Okay, so let's talk about crude oil options. As we all know, the reason why the U.S. the international status of RMB will definitely be greatly enhanced, no doubt. But let's be realistic. Even if RMB settled crude oil options are listed for trading, they will not have any major impact on physical transaction in the crude oil spot market, as far as I'm concerned. Well, countries around the world would still use US dollars to buy and sell crude oil, and most of China's foreign crude oil trade is also settled in US dollars as well. And the world's demand for the RMB and the willingness to use RMB as a foreign exchange reserves has not changed. However, if we look at this, from another angle, on the one hand, the introduction of crude oil option into foreign investor transaction will be definitely a major breakthrough in China's financial opening up, which brings more choices to global investors. And for those, some foreign institutions that do have this type of demand will increase their demand for RMB as well. On the Let's see, on the other hand, China has begun to, frequently settle the various commodities in RMB with several oil producing countries such as Russia and Iran. If it's possible to settle crude oil trade with more major crude oil producing countries in RMB in the future, it will be a significant progress in the internationalization of the RMB. And also, in our communication with exchange, we were informed that in the future, chemical products and shipping indexes will also be open to overseas traders as an international product. I think this is a very, is a positive signal, which not only means that in the future foreign investors will have more investment targets as choices, but also that the pricing of Chinese future products will be more valuable. And now we have just talked about the international varieties. So how can clients participate in the trading? Here is just a trading path diagram. Let's start with the very top of the page. If a foreign investor want to trade A shares, he can directly open an account with HGH security company to trade securities and ETF on the Shanghai and Shenzhen Stock Exchange. And if the clients wants to trade those non-international future products that I just mentioned, and if the clients have a domestic NRA bank account, then he can directly open an account with Nanhua Futures. If he does not, or if he's unwilling to use an NRA bank account, he can also open an account with HGH International, because HGNH is also an overseas intermediary agency of Nanhua Futures. So the clients can also trade those international varieties in this way. In addition to A share and international future products, if clients want to trade more products, let's see, private fund, a public fund, or stock options, according to the new regulation of QFII in 2020, they're able to do that as well, which I will explain in the next couple of slides. Okay, so you may still have questions. What if I want to trade other non-internationalized future products? Can it be achieved? Well, the answer is definitely yes. QFII and RQFII has always been a hot topic, not only for overseas investors, but also domestic as well. CSRC and PBOC jointly issued the provision measures on administration of domestic securities investment of QFII in 2002, right after we joined WTO. And here is just a chart greatly showed that how the QFII policy had been developed step by step, from the initial total quota of only 10 billion, and the investment scope is very narrow, to now the QFII quota is unlimited, and the investment scope is very wide. The change of the QFII policy, guaranteed that China's capital market should be and will be considered by the investors overwide. Okay, and I have to mention that the new regulation for the QFII management that begins in November 2020, according to CSRC number 63 document, the interest threshold for the QFII investors have been lowered and the investment scope has been greatly expanded. This page is the scope of the investment under the new regulation that everyone is most concerned about. Well, matter of fact, you don't need to remember all these letters. All you need to understand that is this new regulation have added commodities, options, and private aggregate funds to the original investment scope. Well, in other words, QFII investors now allowed to invest in securities, bonds, commodity futures, options, public fund, and private fund listed on the domestic exchange. The private fund that I just mentioned refers to securities investment fund, which is investment in the secondary market. In other words, current QFII is not allowed to invest in private equity funds for the time being. So, based on what I've just mentioned right now, everyone can basically judge whether the target investors want to trade it within this range or not, right? So, what parties could be a potential QFII applicants? Let's look at this chart together. In fact, the range of the applicants is broad, including fund management companies, commercial banks, future brokerage, securities brokerage, and insurance company, and so many others. And the above institutions and individuals can flexibly choose either to trade by themselves or invest in the fund at the QFII level on the basis of obtaining QFII qualification. And those two blue boxes underneath just showed you what you can possibly to trade or invest, which is basically what I have covered in the last slide. Okay, and this is the interpretation of the policy. So what is the transaction path of the clients in the actual operation? Let's look at the picture below right here, which basically shows what the investment structure will look like. In this case, I'm using HGNH as asset management company as an example, since HGNH has got the QFII license since 2013. First of all, you see clients can set up a fund product in Cayman Islands and then invest in RQFII or QFII account through HGNH asset management company, which will allow the clients to trade futures, securities, bonds, and private equity products at the level of QFII account. At the same time, products established by clients in Cayman Islands can also directly participate in other exchanges around the world through HGNH International. Well, the implementation of this chart is very flexible. If investors want to build a structured product, then the product can be set to ABC classes. If there is no such need, it can be made into just a simple managed product. And also, if the investor wants to do cross-market arbitrage, then he would keep the two part of both domestic and international. If not, just ignore one of those. Okay, moving on to the next slide. Let's see what have changed under the new QFII policy. Before the new QFII policy came out in 2020, both QFII and QD has quota limitation, which leads to the fact that many cross-market arbitrageurs traded from domestic China to overseas market as far as trading path. A bit more detailed is the clients used to invest abroad through QD, even with higher fees and limited QD quota. However, the new policy provides a better choice for such clients, since QFII has now abolished the quota restriction, and even better, investors can directly invest or trade in the QFII level. The clients of internal and external arbitrage can set up an overseas fund, like I just mentioned in the last slide, and directly invest in the QFII account through the fund, so as to trade the Chinese market as well. Another benefit is that the new model allows the fund to be registered in Cayman Island or BVI, so providing much more regulatory flexibility, of course. Okay, so why should clients choose Nanhua futures over other brokerages? Well, me personally, I think it can be reflected or explained in the following aspects. Okay, first of all, our global strategic layout. We have branches in Chicago, Hong Kong, Singapore, and London to serve clients in different regions. And these branches also have they are also qualified as trading members in major exchange around the world. For example, our Hong Kong company is a member of Hong Kong Future Exchange, and our Singapore company is a trading settlement member of SGX and Apex, and our US company is a member of CME Group, DME, and IC US member. And last but not least, our UK company is one of the few secondary member of LME. So with that being said, clients can trade these major exchanges around the world all in one platform. If clients have a need for cross-market arbitrage, then our platform will definitely maximize the convenience of their trading experience. And besides, I also want to point out our technological advantage, because we have always said that Nanhua Future is not only a brokerage company. Instead, we are a financial technology service company with derivative business as our core. And since our establishment, we have been committed to the layout of the global trading network, especially in order to serve those high frequency quantitative clients. We have set up dedicated lines between, you can see, major exchanges and provide computer rooms custody to maximize their transaction speed. And also, we are able to design cross-border product architectures for clients based on our years of overseas business experience. And Nanhua is a very large platform, and our partners include various experts in the market in investment advisors and custodian banks, so we can provide diversified investment scope, product types, and fund passing options based on our clients' investment goals. And in fact, so far our department have helped more than 10 QFII institutions successfully invest in the Chinese market. And our experience in serving overseas institutions is definitely one of few in the market. So I believe the above is the reason why clients should choose us. And in addition, you can also search Nanhua Futures on LinkedIn or YouTube. We will regularly publish news of Chinese Chinese future markets and research report from our Nanhua Research Institute. And on the right-hand side is the contact information of our team. Please feel free to contact us by email above if you have any consultations or business cooperation requests. If you have an inquiry about a certain business sector, you can also contact us through our personal email. I believe that's pretty much everything I have for you guys today. And I really appreciate your time and have a lovely week. All right, back to you, Alex.